What's going on, guys? It's Wealthy Future. Welcome back to the channel. Today I'm going to be showing you 5 different strategies of when to buy and sell a stock. Now, this kind of depends on your time frame and how long you want to be holding a stock or invested in a company. And these strategies are geared towards day trading and mainly swing trading. So it could be a day, a couple days to even a couple weeks or even months. So first I want to just take a peek at the overall market here. Got the QQQ, the tech sector here. As you can see, we kind of pulled back today really hard after this beautiful recent rally. Kind of pulled back pretty hard today and got bought up here in the afternoon pretty well. But I think this is healthy considering the pretty much weak rally we just had. So the first buying strategy that I want to talk about is the power of 3 strategy. On the screen I've got Tesla pulled up here. So what the power of 3 strategy is you are using the moving averages as support. So if I go up to indicators, I can bring up some moving averages here. So I've got 3 moving averages here. I'm going to change them all. And for the power of 3, you're going to want to be using the 10-day moving average, the 21-day moving average, as well as the 50-day. So for the power of 3 strategy, the 10-day, 21-day, and 50-day. So what this strategy basically is simply whenever these 3 moving averages start to converge and get within 1 to 2% of each other. We can see on Tesla this started to happen back in November of last year. So we got really tight. You can see we were in a rally and the moving averages were, they were clouding up, they were getting higher, they were separating from each other. We were having a beautiful run to consolidate our gains here. And what you can see is these moving averages got really tight with each other. The dark blue is the 50, the light blue is the 21, and the 10-day is this yellow-orange. So you can see they all 3 got really tight right here. And as soon as they started to curl up, we had this beautiful rally. And we didn't even cross below the 21-day line until the very peak. So this strategy is very powerful. These moving averages, some of them take a while for them to form and change the trend. So when you have all 3 of them forming support and starting to trend upward, it offers a great entry and a beautiful support line to ride. As you can see, it crosses below the 10-day moving average sometimes, but it catches support even before it touches the 21-day. So your entry is right above these moving averages, and as soon as they start to curl up. Now, the next strategy I want to talk about is called the undercut and rally strategy. So what this is simply you have a support line in a strong stock that has kind of seen some profit taking, some consolidation, and just a nice correction, a nice pullback. And what you see is a nice support being tested and then undercut. So if I can draw this support line here, and we're looking at Sono for this. If I can draw this support line here, you can see that we kind of undercut the support line and then quickly rallied above. The buy entry would be a recapture of this support line after it has undercut the line. And what makes this a really good entry is that your stop loss would be right below this undercut. So a very tight stop. As you can see, we rallied from the low 31 up to around 34. So that is the undercut and rally. You see this pretty often in a bull market and strong stocks. So really keep your eye out for these stocks that may have been quiet or selling off. Make sure you're still looking out for those, because buy entries just like this undercut and rally can offer really, really good returns. Another undercut and rally stock I wanted to show really quick is Zscaler. You can see we first came down and found support right here, right after a great run and some consolidation and some profit taking and selling. You can see we come down again to test it and undercut it and quickly rally above. It takes some more days for us to gain momentum again, but we don't undercut this low at all. And that would be our stop loss. And you can see we caught the low and we saw a massive rally. So the undercut and rally is massive. All right, number 3 for buy setups. This one is called a high tight flag, or a high and tight flag. It's really simple. All you have is a high and tight flag. So the requirements for a high and tight flag are it must be up at least 90% in the last 2 months. As you can see, on June 21st, we reached a high of almost $60. And just in May, we were trading in the 20s. So this is well over a 90% gain in 2 months or less. And so what the high and tight flag looks like is you have the beautiful 90% rally at least in 2 months or less, and you start to form this high and tight flag. As you can see, the buy entry would be a break of the high of the flag. And we got one right here at around $60, and it went all the way up to almost 67. So just a beautiful, beautiful breakout trade. This is the high and tight flag. So another buy setup really similar to the high and tight flag is just a bull flag or a bull wedge breakout. So we're in a strong stock. The context is an uptrend. So what I'm looking at here is we have a high and we start to form this downtrend line here. And what you get when you break out of this downtrend line, you can get a really, really massive quick breakout. We broke out around $14.40 and reached almost $16. So nearly a $2 move per share at a $15 stock. This pattern is very popular. It's very common in the charts. Sometimes you have to really be following the overall trend of the market, or there has to be strength in the market overall for these to really, really follow through. But even when the market is not doing great, you can see if you play these quick for day trades or quick swing trades with tight stop losses, you can really, really capitalize on these really common buy setups. So the fourth type of buy setup is really, really powerful, and it's fairly common as well. So what it is a double bottom. Now you see double bottoms in a strong stock that has pulled back some. So right now we're looking at AMD. Beautiful rally over the months. We come down and we form a beautiful double bottom support, even a triple bottom. So I zoom in here, you can see that we formed a beautiful double bottom right here. Triple bottom even with this first. So the buy entry for this fourth setup on the double bottom is going to be on the high of the candle that has formed the support. So you can see this red candle right here that came down and touched the support. We would be buying on the break of the high of that. And our stop loss would be really tight underneath the double bottom. So we have a really tight stop loss, and it's a really, really powerful pattern. So you can hold these for a while longer, possibly even for months. As you can see, our entry here would have been around $76. And the stock nearly touched 100. AMD again, just further along on the chart. You can see we have this kind of bottoming support, double bottom, with a little bit of an undercut like I talked about in the previous strategy. beautiful 74 to nearly $100 rally. So that is the double bottom. Got a few more double bottom examples. This is Zscaler. As you can see, beautiful double bottom support with a mini undercut and a beautiful, beautiful rally. So we're in strong stocks. We're looking at strong stocks. As you can see, there's a double bottom over here again on Zscaler. Strong, strong stocks pulling back, finding support, showing strength still, showing buyers are still wanting to come in. Buyers were clearly coming in back here. We started to take a breather and they're still coming in. Shows a ton of strength. So look out for these double bottoms. All right, so number 5, the last buy setup I want to talk about here is the cup and handle. This pattern is a little rare, but what the cup and handle pattern is you have a stock that has formed this massive cup-shaped base. So we're downtrending, kind of have this circular shape, this cup shape, and then we form a handle. The handle on this stock, DocuSign, is a very small handle, just because this is a very strong stock. What you see is a beautiful cup, a handle, and then a breakout of these highs. So this pattern doesn't happen quite as often, but it's very powerful. It can be very risk to reward favorable. So just look out for stocks that are building these beautiful cups. Watch for them to handle. There's multiple buy setups here. As you can see, we have the undercut and rally, double bottom buy setup here. Got a pivot here we can buy. The pivot here we can buy, and then the cup and handle we can buy as well. So just in this one stock alone, there has been 4 to 5 buy setups since early to late May. So just really, really focus on learning these buy setups, finding them, and just being able to take them and realize that you have to expose yourself in order to get the gains, and make sure you use stop losses. I hope you guys enjoyed today's episode. I hope maybe you learned something and maybe found some new ideas for your trading. And just looking at the overall market again, we're starting to pull back a little bit here. So just be a little cautious and a little more aware of your position sizing, and I would not be surprised if we consolidate just for a little bit longer and then we go on another beautiful massive rally. So just really focus on these buy setups, learn them, and be ready to take them, because I think we're going to be seeing lots and lots of buy setups here pretty soon. Thanks again for watching, and if you haven't subscribed, make sure you're subscribed, leave a like, and let me know what stocks you guys are looking at, maybe some of the strategies you use, and let me know down in the comments.